All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're going to be talking about is we're going to be talking about my portfolio, the real life portfolio. This is the portfolio that I actually own. It's about $7,000 worth. And what we're going to do in this video is we are going to debunk how with only $7,000, I'm able to make $2,000 in annual income, roughly $166 every single month. What we're going to do in this video is I'm going to dive into my top 3 holdings, which provide me with the bulk of my cash flow. I'm going to show you guys how I'm able to earn so much from so little capital. What we're going to do is we're going to dive kind of into those investments a little bit, but I do have a surprise for you guys. Stick around. I have a sample portfolio. This is not my own money. This is just a portfolio using paper money. And I put it into a bunch of high paying dividend stocks, which I want to show you the results and how they've performed over the past little while. And as you can see, this is a sample portfolio, $400,000, earning about $3,500 every single month. This is a portfolio with tons of high yielding stocks, some that might be new to you. So please do stick around and I will share all of those with you. So if you guys do enjoy this video, what I do want to say is please do subscribe. We're up to 3,347 subscribers. As you know, we are honorable investing. I'm not trying to hide anything from you guys. Our last video was on Zim integrated shipping. Their Q3 earnings didn't do as well. 10 out of 10. We like 1 out of 10s over here, not our dating life, you know. But so our views were roughly about 269. That's okay. You know, that's all right. I knew Zim was going to do a little bit less, but nonetheless, still a great video. I know you guys enjoyed it. And I want to say thank you to everyone who watched that and everyone who's subscribed to the channel. So without further ado, let's get into it. So my portfolio here, $6,802.88, down roughly 28%. But that is not all true, just due to the fact that I'm receiving a lot in dividends every month. Every single month that I receive dividends kind of come out of this price here, but they get reinvested, and so I earn more and more every single month. Now, going into my stocks here, what I do want to show you is the dividend yield. And actually, you know what? We'll go to the annual income. So the highest annual income for me is going to be from KLIP, which comes at roughly $869, then TSLY, and then QQQY. Now, these are the 3 main funds, and I have them up on my tabs here, which I'll show you them in a second. But the reason that they make up such a majority of my annual income is due to their yields, with KLIP having roughly a 50% yield, TSLY 62%, and QQQY at 65%. Now, I don't necessarily have the most capital invested in these companies. Of course, KLIP and TSLY, they're going to be at the top in terms of my equity, with about $2,000 in KLIP and about $1,500 in TSLY. But as you can see, I have a lot more capital invested in a lot of other companies, and QQQY actually sits more towards the bottom. It is roughly about a $200 investment that yields about $120 every single year. So that is kind of the bulk of where my portfolio income comes from. These 3 stocks, these are all covered call paying ETFs. And the cool thing is with these ETFs, with KLIP, TSLY, and QQQY, what I could do is take all this $166 that I receive in dividends. I could either reinvest it back into these companies to earn some awesome and even more annual dividend income, or I could choose to reinvest them into the stocks that I own. I am a dividend investor. That's what I like to do. I like to invest my money and stay on top of everything. And receiving this amount of money every single month allows me to kind of reinvest and continue to invest even if I don't have the capital necessarily on hand. Now, the 3 investments that I do invest in, you guys know Tesla with the YieldMax Tesla Option Income Strategy ETF, a synthetic covered call writing and selling ETF, which writes synthetic covered calls on Tesla. They produce a pretty good dividend. We also have KLIP, which is the Kraneshares China Internet and Covered Call Strategy ETF from Kraneshares, and they write covered calls on KWeb, which is their underlying sector, if I can find that here, right here. And last but not least, we have QQQY, which is a Nasdaq 100 Enhanced Option Income Strategy ETF. They write/sell 0 DTE, 0 date to expiry money puts on the S&P 500. And so those are the 3 that make up the bulk of my income. TSLY has performed a little poorly over the past month, going down roughly about 15% or so and has not yet recovered. KLIP has actually done really well over the past month. As you can see, this is when they distributed their dividend. They're back up to it and even beyond the point at which they distributed the dividend last month. So that is probably about a 6% gain right there, which is great to see. And then QQQY has also done pretty good over the past little while. Just going to their 1 month history, you could see they paid out this pretty big dividend. They were in a down spout, but they're kind of slowly recovering. And I was actually debating whether or not I should sell QQQY and then look to reinvest more and at a better price, but I think I'm just going to hold onto my shares and reinvest. If I really feel like doing so, I will make a video on that. But now, the point where you might have all been waiting for as well, I have a $440,000 paper portfolio, which I created on September 19th. And just to kind of go over the 1 month or even the 3 month history here, you can see I'm only down about 3%. And this is a portfolio that's yielding 20%. So obviously my current dividends are definitely outweighing this current capital loss. And as you can see here, obviously the price fluctuates. I've been up and down quite a bit, but you could see here for the most part it's trading relatively flat. Now the stocks that I have in this account, we can go over them right here. Actually, you know what, it's probably better that we check them out right in this area right here. Beautiful. So we can go from our biggest losers to our biggest winners. So in this portfolio, what I did was I basically bought about 1,000 shares or 1,500 shares or about 2,000 shares of every single company that I thought was high dividend yielding. Now, just to check even their dividend yields right here, you could see that some of them are low, but some of them are 65, 62, 50, 48, 36, 29, 22, 19, and the list kind of goes on from there. Now, what I want to do is I'll start with some of the worser performing stocks, some stocks that you could say you could stay away from a little bit. In my opinion, the one would be ORC, and that's just a stock that has performed very poorly over the last little while. As you can see, 23% down for me, and I think this is a stock that pretty much trades down. This is a stock that I watched for a long time in previous times, like over the previous years, and it's pretty much been straight down, and this has not recouped my investment in them. So next one, TSLY. TSLY had a pretty poor month. It's down 20% in this portfolio and could potentially be a good buying opportunity, but at the same time, you want to make sure the stock is appreciating. I know it's been kind of underperforming in the capital appreciation area. Now the next one is Goff with a, let's see what the dividend is on this one. About 17%, so not too bad. CLM is another one, down 10% for me in the past month. And you got to think as well, in the past month, there was actually a little bit of a rough spout here in October where a bunch of funds like CLM really got hit hard, closed-end funds. So you got to keep that in mind too. USLY, another one that got hit hard, especially the gas industry, and pays me about 30% dividend. We got OARC right here at roughly negative 10%, SMHB at negative 8%, TLTW at negative 7.33%, paying a 15% dividend. We got QQQY down 6% roughly, EDF down roughly 6%. These are stocks that pay me 61% and 16% respectively. Then KLIP is down roughly 4% with a, obviously, you guys know KLIP's dividend, about 50%. HYGW is the next one, SPY, QYLD, JEPI, SVOL. I also could have included JEPY, but I'm pretty sure JEPY came out after I created this fund. But then we got ones like SVOL, PDI, SJT, Aptly, and NVDY. And you can see here that a lot of the ones in the really good performing, where they're actually in the positive, are actually the YieldMax funds, which is kind of interesting to see in terms of the high yield funds. And these are funds that still offer, 60%, 20%, and, 10% dividends. So this was the entire portfolio for kind of like my paper trading account, just to kind of have some fun and, see where dividends could lead us. As you can see, they're all making pretty amazing, dividends over the short term. One thing to note is even though I'm seeing stocks that are down 20%, 17%, 10%, 10%, I'm still only down about 2.6%, and that is due to the fact that they pay some amazing dividends. Now, obviously, certain stocks should be in the red and should probably just be avoided altogether. But if we were to cut those out and create a portfolio, we'd have a portfolio with a pretty good capital appreciation value and obviously amazing dividends. All right, so I hope you guys did enjoy this video. I just wanted to show you guys my sample portfolio, how I'm making about $166 every single month, $2,000 every single year. I wanted to show you my stocks, the bulk of that income, and also the sample portfolio because I wanted to share with you guys some, I wouldn't say amazing stocks, but I'd say some great yielding stocks because I don't condone buying any of these stocks. Honestly, I'd honestly advise to stay away from some of them. One being ORC, that's one that I kind of caution against, and maybe SMHB. I know I talked about it in the past, but it is ETN, and I'm kind of staying away from ETNs at the current moment. Kind of controversy because I do own USLY, which is an ETN, but it's performed well for me. But ETNs are definitely a lot more risky, as I'm sure you guys are aware. These were just some stocks to bring to your attention for high yields, because I know you guys like that. And, you know, it's fun. I also like the high yield fund, so it's fun for me as well. So I hope you guys did enjoy this video. I hope you guys do subscribe and do stick around. I will see you guys in the next one, and I hope you guys have a great day.